How low can the Japanese yen go? That is the question on everyone's minds. The weak Japanese yen has been the story throughout the year. What began as a slow downtrend at the start of 2024 accelerated into a major decline in the second quarter. So much so that the Japanese government could not tolerate it anymore and intervened to physically buy the currency in this past April. Now, dollar yen has broken above that 160.23 April high, which means that we've seen the 34-year low become a 38-year low in the Japanese yen. When we see a currency move to multi-decade extremes beyond what most of our charts show, everyone wonders, how far can it go? Thankfully, I have some charts that go even further back that I will share with you in just a minute. But first, before we dive into those details, hit that subscribe button and the notifications bell for more valuable videos like this if you're not a subscriber already. First, I want everyone to understand that countries like Japan usually love a weak currency. If the yen is at 30-year high, that would be a much bigger problem that would create panic across the ranks of the Japanese government and would surely invite quicker, more aggressive, and more persistent intervention. Japan, however, is a country that's dependent on exports. So when the currency is weak, it makes the products that they sell cheaper and more attractive to foreigners, driving up sales and demand along with the earnings of Japanese companies to sell abroad. To the dismay of many living in Japan, it has also created a tourist frenzy. This year is expected to bring in 33 million visitors, the highest number ever. For many, this is the cheapest that the exchange rate has ever been in their lifetime. Retail sales will surely benefit from this demand, but a weak yen comes with its own problems. It drives up inflation, which is not a huge problem for Japan because inflation rates are still low. It hurts the profits of any Japanese company importing goods to sell or raw materials to buy for production. And it makes the cost of servicing their debt more expensive. And this is where the real problem is. So why won't the Japanese government stop the slide in the yen? We'll talk about that later because I know that most of you really want to know how far can the yen fall. So let's go to our longer term charts and take a look at that. Okay, so this longer term chart is from macrotrends.net and it goes all the way back to 1971. So you can see, yes, we are trading at dollar yen's highest level since the, I believe, 1986. But, it has certainly been at higher levels since then. And this overall is a very long downtrend in dollar yen. So now that we've got some longer term levels, where are the most important fib retracements? Well, let's take it from the ultimate high at in 1971 at 357.72. So if the high, this is a Fibonacci calculator from investing.com, 357.72 is the high. And then we get back to the low, and the ultimate low in dollar yen was in 2012. And I believe it was 76.77. Let me just double check. Give or take, 76.77. So 76.77. And if we calculate that, what that means, and it shows us that in terms of the fib retracements, the 30, and I wonder if I can just make this a little bit bigger. I don't know if I can. Here we go. That's perfect. What I want you to look at is down here, the 38.2% fib, the entire move down from the 1971 high down to the 2012 low is at 184. So that's very far from current levels. If you ask how high can dollar yen go, well, from a fib retracements perspective, it looks like it could go to 184. Now, what if we're a little bit more conservative? And let's take it from this high here. Let me see if we can get it's around 260.55. So 260.55. So let's change this to 260.55. So 260.55, that puts our fib extension at 50% fib retracement at 168.66. So going back to this longer term chart, drawn from here down to here, it looks like 168 is the major fib retracement level for dollar yen. We can flirt around with a couple other levels to see if anything comes interesting. 273.45 from there. 273.45. Obviously need a decimal there. and that puts us at 175. So that's further than 178. And the last one that I'm going to try is actually over here, 305.06. 305.06. I'm trying to see if we get a 23.6% fib number that's better. So 35.06, we have a 160, just under 164 is the 38.2% fib retracement from this high here in 1975 down to this low. So these are the levels I think that you need to be paying attention to. So we have 168, 165, which is a round number, but more likely the closest significant fib retracement level based upon these historical numbers is just under 164. And just a trading tip for you is that with dollar yen hits round numbers, unlike euro dollar, which likes to run past the round numbers and test it, dollar yen will oftentimes stop right short of it. So 163, 95, 97 sounds just about right for a move to stop. So how high can dollar yen go before it hits some resistance? 163, 97, 164 is a level that's a potential opportunity. With dollar yen trading above prior intervention levels, why hasn't the Japanese government come in to intervene? Well, they have gone to great lengths to talk down the currency, which we know is pretty much useless. The market doesn't want verbal intervention. It wants to see physical, coordinated intervention, which is very unlikely because that involves other central banks selling their own currencies, which, if you think about it, would drive the currencies lower and drive their own inflation higher, which would set back their own inflation battles. And none of this would be ideal in the current political environment in the US or Europe. Second, the Japanese yen is weak and the US dollar is strong for some very good fundamental reasons that cannot be fixed easily, which is that even with Japan's interest rate hike and the promise of more to come, Japan's 0.1% interest rate is peanuts compared to the US's 5% interest rate. The Fed's reluctance to lower interest rate quickly is also a problem for Japan. They'll be fighting a losing battle, as we saw back in April. Intervention back then only lasted 5 days. So if they don't want to waste their money and fight that losing battle, they've got to do something different this time around. And while they do have plenty of options, I don't think that they have the resolve or the readiness to do so. Part of the reason is because the Japanese government has told us time and again that they don't target the exchange rate and focus more on volatility. So I want you to take a look at this table. So I want you to take a look at this chart. The Japanese government have said that they don't target a specific exchange rate. Instead, they are focused on the volatility of the moves. And I've also talked about how 1 month volatility, 1 month dollar yen option volatilities are very important. So right now, dollar yen's hovering around 160, which means the strike price is somewhere between these two numbers here. So the implied volatility on a 1 month basis for those are just under 9%. When the Bank of Japan Ministry of Finance came in April, volatility was at 12%, above 12%. So volatility is significantly lower right now in dollar yen than when it was in April. So from a volatility perspective, this may not be the time that they think that the price action is volatile enough for them to come in. Of course, it would be completely ignorant of us to really believe that they don't target the exchange rate. The exchange rate is still very important, especially in a psychological level. So I think that will still play a role, but one of the reasons why they're holding off is because volatility is still low, and it did not reach peak levels that they felt the panic to intervene back in April. But they will come in and intervene eventually. So I'll take this opportunity to warn you that intervention can lead to quick and powerful moves in the currency. We are talking about 150 to 400 pips in a matter of minutes. The timing is always a surprise because, that's the point, right? To catch the market off guard in the hopes of stomping out traders who are betting against them and magnifying the move in the process. The direction is always known in advance because we know what the move that they're trying to fight against, and they're telling us verbally what they don't want to see. To give you a sense of the move, the first time that the Bank of Japan intervened in the Japanese yen this past April, dollar yen dropped 170 pips in 5 minutes, and then another 400 pips over the next hour. They came in again later, and it dropped to 258 pips in 10 minutes. The effects lasted for 5 days before dollar yen bottomed and turned higher. Since 1985, Japanese officials have actually come into the market 16 times to buy or sell the Japanese yen. Only 7 of those times were actually successful, and all but one of that was a joint effort, so they really need that. Now, there are 3 ways to trade intervention. The first is to bet on intervention happening, which I can tell you firsthand is a challenge. The second is to fade intervention, as long as it's not coordinated. But be careful, because the swings can be wide, and maybe you want to wait a few days before getting in, because there could be a few day volatility. The third way is to stay true to your trading signals, take small positions, get in and out quickly, and always use a stop. Small positions are particularly important because when there's an intervention, I can guarantee you that your stop prices will not be honored. There will probably be significant slippage, which is why it's probably much better to trade in the direction of potential intervention and not against it. I hope this video helps you get a better understanding of what to expect for the Japanese yen, how far it can go, how to manage the positions, and what to be aware of. Let me know if you're staying long dollar yen, trying to sell ahead of the intervention, or watching from the sidelines in the comments below. Our fundamentals trading course has a lot more great tips on how to trade big events and risk like this. So please check out the description below for a big discount. Also, make sure you hit the subscribe button if you don't want to miss more content like this. I'll see you all next time.